What's in store for the 2025 housing market? Most of the national resources out there would like you to believe that the real estate market's going to go up about 2 to 4% this year. Will it crash? Probably not, but we'll go through some more prognostications at the end of this video because this year 2025 is shaping up to be a lot like 2005. I'll go through some of the reasons why and what you can look forward to for the rest of 2025 and beyond. Before we get started, I'm KP. I've been in real estate since 1994. I got my real estate broker's license in 2003. I've been buying, selling, investing in real estate for over 20 years. And if you've got anything you need real estate related, feel free to let me know. If you're new to the channel, make sure you subscribe, hit that thumbs up as well. Those likes really help out the YouTube algorithm. Now, let's dive right in. Making predictions for the year ahead is always a challenge. I've gathered insights on some of the most pressing housing market concerns, including mortgage rates and sales volumes. There's cautious optimism for modest improvements in the real estate market. According to strategists at Redfin, a national brokerage, mortgage rates are expected to remain in the high 6% range throughout 2025, averaging around 6.8% with fluctuations over the year. Investors are anticipating that if President-elect Donald Trump implements a significant portion of his proposed tax cuts and tariffs, and the economy stays strong, the Fed will only cut its policy rate twice in 2025, keeping mortgage rates high. Tariffs could be inflationary, and enacting more tax cuts would increase the U.S. deficit, both of which would push mortgage rates up. High mortgage rates are the second part of the equation that will keep home buying unaffordable. According to the panel of experts at Fannie Mae and Pulsonomics, LLC, consumers can expect mortgage rates to remain elevated, but gradually decline over the year to an average of 6.3%. ESR Group also asked for the major factors driving their home price forecast. The largest group, which represents roughly 80% of respondents, expects home price growth to decelerate, citing continued high mortgage rates, rising for sale housing inventory, and slower wage growth as the main drivers. The minority of panelists who expect faster home price appreciation most commonly cited strong pent-up demand from first-time homebuyers, continued tightening of inventory of homes for sale, and easing mortgage rates. Realtor.com forecasts a full-year average of 6.3%. Mortgage rates are expected to keep mortgage payments essentially unchanged in 2025, despite continued home price growth. With Donald Trump's victory in the 2024 election, the U.S. housing market could see significant shifts, from regulatory changes to tax policies, and potentially even a recalibration of housing supply and demand dynamics, especially since President-elect Trump is a developer himself. According to the Mortgage Bankers Association, rates will average 6.4%. Mortgage rate forecast is based on Freddie Mac's 30-year fixed rate, which is based on predominantly home purchase transactions. The question of whether home prices will rise in 2025 depends on several factors, including interest rates, housing supply, and overall economic conditions. While it's impossible to predict with absolute certainty, experts provide some insights that can help shape expectations for the coming year. Redfin expects a 4% rise in the median home sale price. The Fannie Mae Pulsonomics forecast calls for a 3.8% gain. The Mortgage Bankers Association expects a gain of just 1.5%, while Zillow forecasts 2.6% home value growth. This is a downward revision from last month's forecast, owing in part to a more elevated outlook for mortgage rates based on recent macroeconomic data reports. Despite this, more inventory is expected to lead to more sales, even without meaningful affordability improvement from lower mortgage rates. Higher than expected mortgage rates are likely to reduce demand for home purchases, shifting it towards rentals. Zillow forecasts single-family rents will increase 4.1% in 2025, with multifamily rents increasing 2.8%. Both forecasts have been revised upward from the previous month. The outlook for home sales in 2025 is shaped by several key factors, including mortgage rates, buyer demand, inventory levels, and overall economic conditions. Each of these elements plays a role in determining whether sales will increase, remain steady, or decline in the coming year. The Mortgage Bankers Association expects a 5.1% increase next year. Zillow forecasts a 7% increase. Signs point to mortgage rates easing in 2025, but as we saw in 2024, mortgage rates rarely follow the expected path. What is more certain is that buyers should expect plenty of ups and downs throughout the year. Mortgage rates fell in September, briefly bringing the share of affordable listings to a 19-month high. They have since climbed back to nearly 7%, changing the affordability picture for homebuyers. More swings like this are expected in 2025, with refinancing sprints occurring during the dips. According to the economics team at Fannie Mae, home sales prices are projected to increase by 4.2% in 2025. This anticipated growth reflects a combination of factors, including steady demand from buyers, constrained housing inventory, and a gradual easing of mortgage rates. While the 42% rise represents a more moderate pace compared to the rapid price escalations of recent years, it signals continued resilience in the housing market. Tight supply conditions driven by limited new construction and low turnover among existing homeowners are expected to keep upward pressure on prices. Additionally, a stable labor market and ongoing household formation, particularly among millennials, will likely sustain buyer interest in many regions. With improving job growth and recent stock market gains, more Americans may feel motivated to make moves in the housing market, according to Lawrence Yun, chief economist of the National Association of Realtors. Yun projects a job increase of nearly 2 million in 2025 and another 2 million in 2026, which could positively impact housing demand. 2023 and 2024 were challenging years for the housing market, Yoon noted. However, there are signs of a potential turnaround, such as a 3% year-over-year increase in pending home sales in September. Yoon sees this as an indication that maybe the worst is over. Other encouraging trends include rising inventory levels for both new and existing homes and significant population growth. Since 1995, the U.S. population has grown by 70 million, yet home sales have remained relatively flat, suggesting a backlog of demand that could drive future activity. Redfin experts suggest that mayors in major cities, particularly those in blue states, may help reverse the trend of people leaving urban centers. They point to new mayors in cities like San Francisco and Portland, Oregon, who are implementing pro-business, tough-on-crime policies. Along with the return of many employees to offices, especially in the tech sector, these factors could help reverse the exodus from large coastal cities. Meanwhile, Zillow's forecast highlights the growing importance of pet-friendly rental policies. With an increasing number of renters getting older and reaching milestones like moving in together or adopting pets, pet-friendly options are becoming essential. The percentage of renters with pets has grown from 46% to 58% since the pandemic, and many renters report passing on properties that don't allow pets. Looking ahead to 2025, Realtor.com predicts a more buyer-friendly market, the best since 2016. With inventory expected to be at its highest since pre-pandemic levels, they foresee around 4.1 months worth of homes for sale, indicating a balanced market, typically defined as 4 to 6 months of supply. Anything above 6 months would be considered a buyer's market, but that scenario is not anticipated in the near future. So what'd you think? The national resources would lead you to believe that the prices are going to go up a couple of percent here and there. That's like saying it's going to be sunny in San Diego. You've got a 99% chance that you're going to be right. Will the real estate market crash? Definitely not. The distressed properties in the county right now are at all-time lows. Plus, we'd see some indications of a slowdown prior to any type of reversal when it comes to prices. With that being said, 2025 reminds me a lot of 2005, in which case real estate values were zipping along, hitting all-time highs. But what we saw in 2006 was a reversal, similar to what we had with the George Bush second term. He cut regulations, he cut a lot of the industry standards, made businesses much more profitable. But when we got to 2007 and at the end of his term, 2008, you guys know what happened. The Great Recession. This has a lot of feel to that. 2025, 2026 could be a really good time for real estate, but I am in the very strong opinion that 2027, 2028, we're going to see a reversal of prices across the board. We've had a nonstop rip-roaring market when it comes to real estate in San Diego County since 2012. That means 13 years plus of up values. We are due for that reversal. If you're looking to buy real estate right now in the county and you can hold off for a couple of years, you're going to be well rewarded. And if you want to take advantage of all-time high prices and want to escape to a lower price community, you can do that as well. There's a good time and a bad time to buy and sell real estate when it comes to any market, and I'm here to help with that. If there's anything you need real estate related, feel free to use that link down in the description below. Thanks for watching, and I'll see you on the next video.